Hello. Back on the 4th of January, I released my first deep drill into Pacific Biosciences, ticker symbol PACB, when it was trading at $26 and some change. It then went to the moon and hit a high of $53 on the 11th of February. Since then though, the stock has crashed back down with peaks and bottoms around $35 to $20. Its fundamentals have gotten stronger and the institutions have totally brought up the stock. Where do I see PACB going from here? Stay tuned for this and more. Keep it simple. Well. Following a huge run-up in the genomic space at the start of 2021, it's safe to say across the board the genomic stocks have cooled off and come right back down to earth. Remember, pre-COVID and back in late 2020, PACB was trading at sub $10, and if you were following ARK who loaded in back in August 2020 at an average cost basis of $2.66 a share, you would be filthy rich right now.
That's what I'm talking about.
With earnings coming on the 2nd of November, I believe the stock is primed for another big leg up. Remember, I ain't no financial advisor, I'm just a simple trader, so no more plugging and let's start drilling. The price action of PACB since late March has seen ups and downs, but what is critical is you observe this level right here, which is around that $25 mark. We have seen the price of PACB hit this level and bounced up on no less than 8 previous occasions, and so if history does repeat itself and with earnings coming around the corner, we could see that big spark we have been waiting for. If for some godly reason the stock breaks through around $35, which has been a strong resistance level on at least 6 previous occasions, then we could be flying high big.
It's time to let the peacock fly.
But when we really look at the price action over the last month, this period has probably been the longest period of consolidation the stock has seen since before 2020.
Understand that when you build a base like that, one of two things is going to happen. It's either going to break down, and that's what a lot of the bears have been betting on, and they've been throwing everything at it, or it's going to break out. Clearly, we believe it's going to break out. And the longer the base, you say 5 years, the longer the base, the bigger the breakout. So we're really looking forward to that.
What does this mean? Simple. It means that even at the current $25 levels, we have some serious support now built into the PACB stock. Let me give you a simple metric, 85%. Depending on which site you look or where you look, the figure is gonna be around 85%, and what this figure represents is the institutional ownership of the stock. If you have been following the stock, then you know, even back in July the number was around the same. No big deal, right? Well, what it does mean is the big boys are holding strong, meaning their bull thesis for piling in remains, and that spells bull all over it. According to Nasdaq.com, we can see the increased positions outnumber the decreased positions by 7 million shares. ARK are the largest institutional owner of PACB, and what have they been doing recently? Buying in more shares of PACB. When we look at the rest of the figures, 3.7% of the stock is owned by the insiders. Then that means we have a little over 10% of the stock on the market that retail has access to. And how many retail investors like me are hodling the stock for a long-term play? I suspect I ain't gonna be the only one, right? Now, the short interest, according to shortsqueeze.com, is at 7.47%, and that is big. Why? Let's do some math. There are approximately 190 shares being the float. Deduct 85% being the institutional shares means we have around 28 million shares remaining, and deduct 14 million shares being the shorted shares. That leaves us with around 14 million shares. What would happen if any solid results or news that comes out is clearly a big squeeze potential, right? And according to Fintel, there is a mind-bending 73% short volume ratio on the FINRA/dark pool being recorded on Monday alone. Something huge may just be brewing right here. So what about the overall market sentiment towards PACB? If we look at the analyst price target on market B, we can see the consensus price target is a whopping $50, meaning a 100% almost upside. This may be nothing when you compare it to the recent euphoria of say a DWAC or a fund, but seriously, you would be doing very well to even average 20% a year, let alone 100% returns. On 27th of September, Canaccord Genuity analyst Kyle Mixon initiated coverage on PACB and he set a price target of $45. Yes, $45, representing a 75% upside potential at the time. This is big, but who are Canaccord Genuity? They are only the largest independent investment dealer in Canada with 94.9 billion Canadian dollar assets under management. And who is Kyle Mixon? Well, Kyle Mixon joined Canaccord Genuity in July 2021, meaning 4 months later he initiated his coverage on PACB. Mixon is their director and senior equity research analyst covering life sciences tools and diagnostics sector, meaning he must have significant experience in this biotech space, and we can see from tip ranks he actually initiated a buy rating on PACB before joining Canaccord back in June 2020, meaning to date the gain on his buy rating recommendation would equate to 644%. That is ridiculous. To now initiate another buy rating once he joined Canaccord and for a massive $45 price target means he must have significant research and possibly inside bullish information on where this company is likely going, and that's interstellar travel. On 20th of September, PACB released news that they had acquired Omniome, a San Diego-based biotech company developing a proprietary and highly differentiated short-read sequencing platform capable of delivering increased sequencing accuracy. This is not only big, but I believe this has gone totally under the radar. Why is this big? PACB generally do long read sequencing through their technology and systems. To add short read technology in the form of this acquisition means they have essentially expanded their arsenal in a big way, as they detail in the press release. With this acquisition, we believe PacBio will be uniquely positioned as the only company with both highly accurate long read and short read sequencing platforms. What makes this even more bullish is they go on to detail that in the 60 days since announcing the deal, the Omniome team has continued to make progress on the development of their highly differentiated and accurate short reading sequencing platform, which we believe has the potential to advance cancer diagnostics, drive higher fidelity for single cell applications, and broadly enable clinical sequencing. What needs emphasizing is the huge market for cancer diagnostics worldwide as the populations around the world age. According to the Allied Market Research Report, the global cancer diagnostics market size was valued at $168 billion in 2020, but is set to reach $280 billion by 2028. I mean, the inroads into this market would be tremendous if PacBio, now with both long and short read technology, can look to dominate. Something to take note of is from the list of vacancies on the PacBio website. It is clear they are expanding and planning to expand significantly. There are roles also indicating that PacBio will look to expand globally. This for me is signaling big things to come. To summarize, all the metrics and fundamentals are pointing to a PacB run-up. The coming earnings could provide that big catalyst moving forward, which I believe, given a 5-year time span and depending on how quickly genomics become mainstream, this stock will likely be going for a moonshot. Thanks for watching, and please note, for me, PacB bio is more like a 5-year investment opportunity, and depending on the genomic sequencing space and how big the market becomes, this could represent game-changing EEPG. So please take this drill with precaution, and always do your own DD. If you found this video informative, then do me a simple favor and consider subscribing to my channel so you can get a pop-up when a new video is uploaded. I am a simple trader. I try to keep this simple, and will simply see you in the next video.